Hi and welcome to the Landlord Zone podcast. My name is Nigel Lewis and I'm here with two, I think we can call them heavyweights, from the world of economics and the world of mortgages. They are, in no particular order, I hope you don't mind, Andrew Harvey, who is Senior Economist at the Nationwide. We also have Dan Clinton, who is the Head of Buy-to-Let Lending at the Mortgage Works. And one of the reasons we are here today is because you have brought along your latest The Mortgage Works report into the buy-to-let market, which looks at the value in properties for landlords, both in terms of rent and other matters. But why are you doing these?
Good question, Nigel. We recognise as one of the largest buy-to-let providers in the UK. In fact, at a group level, when you consider VM as well, the Nationwide Group is the largest provider of buy-to-let mortgages in the UK. And with that comes tremendous responsibility to help and support landlords through education. And we recognise education is king in terms of helping them navigate through all of this noise that's going on in the sector today, whether it's regulatory reforms or tax changes. What are landlords feeling? What's their sentiment? What strategy they're taking? These reports are designed to just add flavour to help inform landlords what's going on. So it's there for their own leisure. It's our latest report, one of several we've produced to date, and we'll continue with that journey as we look forward into the future.
Brilliant, thank you very much. And therefore, on that point, I will go to our first question, which is, the Renters' Rights Act has just been signed off by Parliament, although there is debate about when it really all comes in. But along with the tax changes that have affected landlords the past 5, 6, 7 years now, and also the tax changes likely to come through as well in the budget, where do you think landlords, where's their head at the moment? You lend to millions of them. Where's their head at the moment?
Good question, Nigel. I'd say overall it's a mixed bag. So if we cast our minds back to 2015, at the time George Osborne announced changes to tax relief, the PRS was going through incremental growth. And in the subsequent years that those tax changes were announced, the sector has stabilised and has shrunk a little bit, shrunk from about 20%, 21% of all housing stock to around 19%. I guess more recently, we've seen some landlords take action. So some landlords have decided that time's right to sell, or they are planning to sell. Certainly if you listen to certain surveys like the NRLA survey on sentiment would suggest that more are planning to sell than to buy. Then there are other existing landlords that are planning to stay but have adjusted their business models. And we've seen more incorporation as an example. And then there'll be some landlords that see this as an opportunity. It's a buyer's market. House prices have stabilised. Rents have increased quite significantly in recent years. So there is still opportunity. And I'd just say it's a mixed picture. But the general mood around all of the influx of changes is more negative than positive.
And I suppose if we can put the same question to you, but in a more economics level, which is interest rates are in flux, I think we can say at the moment. Certainly the base rate decisions have been a bit all over the place recently. What's your view on, for the landlords watching this now, what's your view on where this is all going?
Well, in terms of rates, I think the story there is starting to improve. So buy-to-let mortgage rates are a bit lower now than they were at the start of the year. Directionally, they're likely to be, I think, possibly nudging down a little bit more. The economic news recently has given more weight to the Bank of England being in a position to ease monetary policy a bit further. So we've had relatively weak labour market data, so unemployment is rising, pay growth is slowing, it's likely inflation has peaked. So that in combination will give the MPC a little bit more confidence that actually they're able to take action. Now clearly they'll be waiting to see what happens in the budget, as we all are, in terms of where that leaves us, in terms of what the fiscal position is, whether that's likely to act as more of a drag on the economy. And again, if that's the case, they are probably more likely to be able to cut rates, possibly as early as December, but certainly into the new year. So in terms of those conditions, potentially an easing rates picture for buy-to-let landlords. I think if we look more widely, the rental market has been pretty resilient, I think, overall. We're still in a position where landlord instructions are continuing to be quite weak relative to tenant demand, so the supply and demand imbalance is still there. So it's still quite an encouraging picture in that sense, in terms of there is untapped demand, I think, from tenants, which landlords may be able to take advantage of, as Dan had mentioned.
Fantastic, thank you.
I think the interesting observation as well, when you look at the buy-to-let market, so the finance part of the PRS, you've seen the balance sheet remain pretty static. There's about 300 billion of outstanding loans in the market, and that's really held up in recent years. But the subtle change is we've seen a drop in the number of loans. So the number of outstanding loans has fallen below 2 million, and it's fallen by about 6% since the peak, March 22, I believe it was. So there's an interesting dynamic there.
What would that be then? So more landlords taking out higher loans? No, existing landlords taking out. I don't know.
I think the improved rate position, pay rates, increased rents has given landlords more leveraging capacity. But then that's offset some of the landlords that have reached their natural maturity or decided they're going to sell. So we're seeing fewer landlords in the sector, but those that remain, the loan sizes are increasing.
Wow, okay. So just watching this, you would almost be persuaded to believe that it's better to stay and work harder at being a landlord than it is to give up and leave to a certain extent, particularly if you've got portfolio, I'm assuming. Yeah, we were talking about portfolio landlords here, aren't we?
Yeah, well, I think, the portfolio landlord is certainly a growing demographic within the landlord population. You're seeing, far more portfolio landlords in the sector than you are your traditional single property landlord. In fact, if you compare trends going back to 2010, the number of individual property landlords or properties owned by single property landlords has halved.
Wow, I didn't realise that. And to follow on from that point you've just made, therefore limited companies as a way of owning property is also increasing. Has your lending book reflected that?
Absolutely. So we were one of the first lenders or the bigger lenders to enter the fray of the limited company market back in 2018. So we've had 7-8 years now of our book growing as a result of limited company balances. Very popular. It is the primary option for those looking to purchase, for those in the higher echelons of the tax bracket. So we expect that to continue.
And for those watching, either who perhaps go through a broker and don't understand how buy-to-let loans are calculated, or someone who is thinking about becoming a landlord, what is a stress test and how does it affect the loan rate that you get? And has that been a factor, I assume, recently, given what's going on with the risk in the market, if that's the right phrase to use?
That's a good question. So, buy-to-let lenders naturally have to stress test a loan to compensate for fluctuations in costs, such as increased interest rates. That pressure became really pronounced during the cost of living crisis and when inflation was going up. And accessing buy-to-let loans became so much harder because the stress rate was far higher.
And that's because you were worried, or lenders were worried, that the tenants paying the rent were struggling, or that you were worried about the landlord struggling to pay the mortgage.
Yeah,
or both.
It was a forward-looking view on what mortgage costs were likely to be, essentially. And lenders also have to adhere to a level of regulation. So there are some very strict guidelines in terms of what stress or loading you must apply to a given mortgage rate. So that's been coming down steadily, and that's definitely opened up and unlocked a lot more lending opportunity, particularly, I would say, landlords located in London and the southeast area where rental yields are so much tighter. That's definitely changed.
So one aspect of the Renters' Rights Act is that tenants are probably going to be referenced much more closely. And referencing is a sort of wider economic topic in the sense that tenants have incomes and they have expenditures, and they also have track records, which some are ideal, some less so. But does this play a role in your decision making when it comes to loans? I know there's just talk about using credit referencing and rental payments as you might want to talk about that. But where are we with this? Is the fact that most renters are going to probably be referenced much more closely a factor in this whole picture, or is it just something the landlords shouldn't have to worry about?
That's an interesting question.
It's wide, but
yeah. Well, I think if we look at housing costs for tenants, they are generally a fair bit higher than for owner occupiers. So this definitely is a challenge, because if they are coming under increasing scrutiny, and we know that, of course, households are suffering from cost of living pressures, that is certainly a factor which is likely at the margin to be impacting some of the tenant demand we're seeing in the market. Now, of course, the referencing themselves doesn't necessarily sit with landlords. A lot of landlords would choose to use, a letting agency or something to do some of the legwork in that. But there are certainly going to be cases where perhaps people are finding housing more difficult, especially if a landlord is becoming perhaps a little bit more selective in light of that.
Because the landlord is going, I don't want a tenant who stops paying the rent, and therefore I'm going to look a bit more closely at their potential previous track record.
Until we've got more clarity on court reform, so landlords have greater certainty around the timescales for evicting tenants when there is an arrears situation. I think there's going to be a scenario where many landlords are going to be particularly choosy around the tenants they put in their property, because they don't want to have that risk. And clearly there is some consequence to a lender as well. So, as you've pointed out, a landlord that is experiencing tenant arrears risk going into arrears themselves, and that therefore could have implications on the lender. But what I would say is that the controls in place by lenders are really strong. The arrears levels are low. I mean, take the mortgage works as an example. We've got some of the lowest arrears rates in the industry. Yeah, right. And if you compare buy-to-let to owner-occupation, the loans are less leveraged. So the loan-to-value caps are much lower than owner-occupation. So there is, I guess, lower risk of lenders being able to recoup the costs in a stress scenario.
If you were a landlord and you were looking at remortgaging or buying a further property right now, and this is a dinner party question, it's sort of like I get asked this a lot, but would you fix or would you go variable? Given what's going on in the economy and given all the stuff we've just been talking about?
Well, I think these days what we tend to find is the vast majority of people go fix. So this is the case in buy-to-let and in the owner-occupier market as well. It's just having that certainty. I think people prefer that. And also in terms of the products out there, you see lenders basically target most of the efforts at fixed rate products, be that 2 or 5 year stuff. So I think personally I'd be looking for a fix at the moment.
And would you fix now or would you wait? That being the next question.
I perhaps would be biding my time a little at the moment.
Oh, right.
Yeah, just given the sort of the flux we're seeing and the potential for bank rate to perhaps come down more quickly, and we may see that reflected in swap rates as well, I think, over the next month or so.
That's a really helpful answer for people watching this, I think. So that is a question. I mean, I always say I'm not a mortgage person, but at dinner parties, but they always ask me this, along with how much is their home worth, and neither of which I.
That's definitely not advice.
Definitely not advice. Yeah.
Yes. Opinion. So I noticed in your new report, or just out report, that you have seen distinctly an increase in HMO loans to convert homes into HMOs, which is not too surprising. But do you feel that this is a trend within the market that is going to carry on, and i.e., are more landlords going to be adopting the HMOs as a model?
It's a really good question. So I would say with the gradual transition to a more professional, larger portfolio demographic, we'll see more instances of HMOs. HMOs come with typically stronger yields than a standard buy-to-let. So I believe the latest yield is around 9%. So compare that to a typical 6% yield. It's attractive. We actually commissioned some research earlier this year of larger portfolio landlords, and we found that the most popular cohort of landlords that were taking up and adopting more HMOs were those that owned property portfolios between 0 and 10. What was quite interesting was the really large landlords, it was less popular. They tended to stick to well-trodden, proven purchase types that fitted their model. So it was an interesting cohort that we identified through that.
Because it is quite fascinating that HMOs used to be a very specialist subject that no one, certainly when I was a property journalist in the national media for the Daily Mail, we never talked about HMOs in articles. It was completely, but now it's front page, page 3, particularly local papers and certainly in nationals as well. What just for those watching, why do you think this has happened? What is driving this?
Well, I think let's go back to the cost of living crisis and inflation. Landlords looking for properties that actually had stronger yields and were forced to look at other means. So we've definitely, through the data, seen a doubling in HMO gross lending in recent years, but that started to stabilise as interest rates have come down a bit and access to finance for other properties has become more readily available. So it's growing, but it's still, let's be really clear here, it's still very much a niche in the buy-to-let sector. It's still 4 or 5% of the overall stock.
But it creates a lot of headlines at the moment locally as people, people who go out and wave placards around saying no more HMOs, that sort of thing. But suppose locally on one street you might get 10, but the rest of the town has none. That's the interesting thing about it. So just while I've got you, and I know this is dodging around a bit, but where do you feel the economy is going? Because I think a lot of, it's a very broad question, I'm aware, but lots of people watching this are making decisions based on where they think the economy is going in the next 12 months. What's your view? Yeah.
Well, it's a tricky time, I think, in the economy at the moment. I think we are seeing relatively sluggish growth. There is certainly increased uncertainty amongst businesses. Some of that is related to the budget and what might come through that. I think the labour market conditions have become more challenging for firms hiring as well. So it's a challenging picture, I would say. We would be perhaps thinking ahead over the next year. We would be looking for modest economic growth, but we're certainly not going to be, pushing things that far, I don't think, in terms of where things are likely to go over the next year. So yeah, quite tough economic circumstances, I would say, at the moment.
Reading your right, I never get the title correct. What adds value to buy-to-let properties? Right. So reading through that, I was very interested in the bit about EPCs and their sort of potential value, both in property value and extra rent you could or may receive after doing an upgrade. But how you're a lending or both your organisations are lending to landlords. So what role does EPC level play in this market now?
It's very much an emerging one. So we have to remember that the reforms have yet to crystallise. So there will be a significant, and probably the majority of the population of landlords are waiting for that clarity before they decide what they want to do and what upgrades they need to make. You have an adjacent consultation going on regarding the EPC methodology as well. So you need that clarity alongside the minimum energy efficiency consultation for landlords to then take action. I would say that there are some landlords that are doing some work to their property, as this research concludes that.
Does,
so
yeah.
22% of landlords have been making upgrades in relation to improving the energy efficiency of their home, and solar panels being the most popular. There's also lots of no-regret stuff that landlords can get on and do, whether it's adding insulation in the loft or cavity. Like that sort of stuff it's generally lower cost and will make will make a difference, irrespective of what the final rule set has. So, but naturally, there's a procrastination until we get that clarity. But there's a massive demand that could come So if you think to meet these rules, or the proposed rules, you're talking something along the lines of 2,000 properties every day that's rated at D or below. So over half of the private rental sector will need to be upgraded between now and 2030.
Which isn't that far away now, is it?
That's crazy numbers. And if you think that most are still holding off, that 2,000 is going to rapidly increase and put a lot of strain on the retrofitters and the markets to actually make those changes. So it's a really, really tight position for
you've got
landlords.
Nearly the end of 25. It takes a good 6 months to get your act together, work out what needs to be done, budget, maybe get a loan, whatever. Then gives you 27, 28, and 29 to really do it, and that's for, I'm assuming, millions of properties. You said like half.
Yeah, over 2 million homes.
But your report does also suggest that homes which cost less to heat because they are more EPC compliant, is the right word to use, are more popular with tenants. Do you feel they are searching them out and going like, how much does this house cost to run now?
It's an interesting one. So it's certainly, our research suggests there is a premium associated with an A or B rated property versus a D. So you're getting an 11% premium on that. So that's pretty significant. And you're also seeing a premium on the rents as well. Now, of course, some of it may be newer properties which might have better features and more in demand from tenants. That's going to certainly be part of it. I think tenants are likely to be very mindful of their energy costs, given that it represents such a big cost of living pressure at the moment. So I can certainly see why tenants would perhaps be pushing their landlord to make these types of improvements as well.
And there's an argument that HMOs are becoming increasingly popular with tenants and therefore with landlords because they like the all-in, bill, all included, bills included,
those bills and that sort of thing.
For the same reason. Okay, and my last question was, from your report, it is clear that, from a practical point of view, the most sensible thing for a landlord to do in order to increase their rent and the value of their property is to add a bedroom or a bathroom. Just talk me through that, because there are lots of other things they could do, but that seems. I was quite surprised by that.
In terms of your thinking, well, there's a whole range of projects. Our research found LandlordZONE, the most popular being things like kitchens and bathrooms. Some of that, of course, is stuff which has to be done, wear and tear. The usual. Some of it's to improve the attractiveness of the property, being able to increase the rent they're able to command. But as you said, the really big sort of winner in terms of adding value, in terms of both value to the property and how much rent you can charge, is something like either a loft conversion or an extension, essentially where you're adding an extra bedroom and an extra bathroom and that extra usable space into the property. That's where you're really getting sort of the biggest uplift. So we're finding you're getting a rental uplift of over 25%, so that's around £285 a month by doing a project of that nature. So clearly it's a big piece of work to do, but you're potentially adding quite a lot of value to the property and to your rental stream.
Wow, okay. And do most people fund this, or most landlords fund this through borrowing, or do they do it through cash? I don't know.
I'd say a mixed bag. So if you consider the PRS is broken down 60-40 in terms of unencumbered versus mortgaged, most will probably do it through cash reserve, but those that don't have those reserves naturally go to a buy-to-let mortgage.
Okay, and one extra question I'll throw in. Given both of your experience of the economy, of lending, of buy-to-let mortgages and landlords, where do you think we'll be in... Well, so the next Labour government's going to finish in 2029, isn't it? So let's say in 5 years' time, do you think the market that landlords watching this are operating in will be very different or not?
I'll go first then. So I would say it won't be too fundamentally different in that time frame. I think you will see that gradual trend continue towards larger professional landlords. There'll be more incorporated landlords. I think the sector at large will still represent something like 1 in 5 properties. I don't think we'll see a dramatic change in that environment. We always have to underpin the economics here, that there is a big supply-demand differential. So whilst you've got a massive shortfall in housing, there's always going to be a strong current of demand for rental, and that will dictate future rents. We'll naturally see fluctuations in between, and there'll be some fallouts here and there with the different reforms coming in, but someone will naturally come in and replace that typically. So, it's been a resilient sector for so many years. I expect the level of resilience to continue up until the end of this Parliament.
Cool. Andrew?
Yeah, very much so echo Dan's sentiments in terms of where things are likely to be. Hopefully the economy will be in a stronger place than it is now.
We all hope this, yeah.
But I think fundamentally we're not likely to see significant shifts in the overall sort of pattern of tenure in terms of proportion renting or owning. The government have got very ambitious house building plans. I think they're going to be very challenging to meet those certainly by the end of this Parliament. A little bit like we were talking earlier around sort of the need to improve the energy efficiency. There's a lot of sort of ramping up which needs to be done in terms of the supply side, in terms of actually building those houses. And the third, we are sort of playing catch up at the moment in order to meet those targets. So I think those supply pressures are likely to persist over the longer term as well.
Brilliant.
What's your projection then, Nigel?
Blimey, that's a good one. So I report on property. I always say I'm not directly involved in either building homes, selling them, but my gut feeling is that the Renters' Rights Act probably won't have the catastrophic effect on landlord numbers that the lobbying groups involved claim. Equally, I don't think it's going to improve the lot of renters as much as some other lobbying groups would hope for, and the Labour, Mr Pennycook has also said that. So therefore, I think that the most likely high impact on the sector will be if the economy were to go into overheat and interest rates start to go up to try and rein it back down. That is much more likely to have a huge effect, I think, on landlords than we've been saying here today that the opposite is likely to happen. Is that as the economy falters, the interest rates are going to go down, so I think overall, if I was a landlord of a particular portfolio landlord, then I'll be sticking to my guns. I think what's happened really is that more people have probably exited earlier than they were planning, and there are probably fewer younger landlords replacing them. That's where do you agree with that? I don't know.
Yeah, I completely agree. I think the beauty of incorporation as well opens up succession planning much more for those in the future. So I think we'll see a more transient shift towards younger demographic through the incorporated model in the future. But that's still some time away. The market's not yet mature in limited company sphere, but that will come.
The hereditary landlord. Although I've got a friend, and he's getting very near retirement and has a pretty large portfolio in South London. All three sons are not interested in the slightest in organising for the unblocking of toilets in 50 properties, and I sort of get that. But equally, I'll be like biting the hand off to be given a portfolio worth 20 million quid. But that's by the by. On that note, I will say thank you very much indeed, Dan Clinton from the Mortgage Works and Andrew Harvey from Nationwide, and thank you for watching.